Regarding the ECB's monetary policy, as outlined at last week's press conference, progress towards a sustained adjustment in inflation has been substantial so far. With longer-term inflation expectations well anchored, the underlying strength of the euro area economy and the continuing ample degree of monetary accommodation provide grounds to be confident that the sustained convergence of inflation towards our aim will continue in the period ahead and will be maintained even after a gradual winding down of our net asset purchases. But this requires monetary policy in the euro area to remain patient, persistent, and prudent. Let me review the recent economic developments. In 2017, growth in the euro area turned out stronger than we had anticipated. The annual growth rate in the fourth quarter was the fastest for a decade. But in 2018, growth has moderated and so far has come in below our expectations. In the latest Eurosystem staff projections, growth for 2018 has been revised down by 0.3 percentage points. This has prompted some questions about the sustainability of the ongoing expansion, which is unusual at such an early stage of the cycle. In historical terms, the current growth period is comparatively short in length and small in size. Since 1975, there have been 5 growth phases in the euro area. The average duration from trough to peak is 31 quarters, with GDP increasing by 21% over that period. The current expansion has to date lasted just 20 quarters, and GDP is less than 10% above the trough. To determine whether the moderation has any bearing on medium-term growth, we need to distinguish between its underlying drivers. In part, the moderation is related to supply-side factors. Some of these are temporary in nature and have already subsided, such as the cold winter weather in large parts of the euro area. There may also be broader supply factors at play. In particular, there are increasing signs that capacity constraints are starting to bind in some countries and sectors. Capacity utilization stands above its long-term average in euro area and in all large economies. The question is how much and how quickly firms will be able to increase supply to relieve these limits. Adjustment is already taking place in the labor market. The labor force participation rate in the euro area has risen by 1.5 percentage points since the crisis and now stands at an all-time high. And businesses have been actively trying to expand capacity by increasing labor inputs. Employment has risen by 8.4 million since mid-2013 and is growing in nearly every euro area economy. This has indeed been a job-rich recovery. Compared with the previous growth phases going back to 1975, the contribution of labor to growth has been the highest on record, accounting for almost half of average annual growth. But the flip side of rising labor utilization has been the lack of capital deepening. Whereas capital deepening contributed at least 0.6 percentage points to annual growth in all those previous growth phases, its contribution to the current phase is approximately 0. This could explain why signs of capacity constraints are now emerging. Growth has largely been achieved by applying more labor to existing capital. Firms should increasingly turn to capital to lift capacity. And this is a process that has already begun as business investment has picked up and now stands above its pre-crisis level.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.